What's going on, guys? Kevin Cage here with another crypto update. Let's dive right in. So we're going to kick off today's video with a quick clip by Raoul Pal, basically saying in the next 10 years the crypto asset class has the potential to go from $3 trillion to $100 trillion. And this was shared by Digital Asset Investor, so this goes in line with Raoul's Everything Code, a theory with the business cycle, the debt refi cycle that we see every 3 to 5 years.
This is the big one. This is your chance to make wealth. And not only can you make a bit of wealth, it's the fastest appreciating asset class in all of human history. So you can catch up really fast. So you just have to get involved and start that journey, but it will level the playing field for millions of people. So my view is it goes from a $3 trillion asset class today to $100 trillion in 10 years' time. So we're only 3% of the way there. And if you put it in different terms, that means there is $97 trillion of wealth that's going to get made.
Yeah.
People are going to make a lot of money, but it's not a few people. It's not like the tech barons or the bankers. This is like, well, Binance has 260 million customers. Now, you could lift 260 million people to change their lives. Okay, that's a big deal. There's 500 million crypto accounts around the world, so you can change 500 million lives. And if you speak to CZ or you speak to the others, they'll say, we want to have 1 billion people. 2 billion people. Well, if you can change 2 billion people's lives, that's a quarter of the world. So it's a very, very big deal. And also it's a big deal because people are getting access to dollars. So the stablecoin thing, I asked CZ about this. I'm like, well, what about stablecoins? He said, I didn't see how big they were going to be. He didn't realize, and most of us didn't realize, how desperate people are to own US dollars.
Yeah.
And so before, to get access to dollars, you had to have access to a big bank and or you could get a small amount of dollars. But normal people couldn't save in it. And somebody in Southeast Asia, they couldn't get access to dollars. And now suddenly they can get it on their Binance app immediately and send it to somebody else, US dollars. That's an incredible change for people. So there's some really big things happening that really changed the world for a lot of people.
So I think that's really interesting to think about. In 10 years' time, do we have the potential to reach $100 trillion? When we think about the global bonds market, that's over $100 trillion. The global equities market also surpassed $100 trillion. And we know there are a million variables out there, nothing is guaranteed, but if that were to happen or anything similar, in 10 years' time, that would be the biggest transfer of wealth in history. We know all the reports out there of the prediction for the stablecoin market cap to reach or exceed $2.8 trillion, we'll call it $3 trillion by 2028. That's crazy to think about because that's close to the size of the entire crypto asset class today. And we have this report by McKinsey & Company from Ripples to Waves discussing tokenizing assets, and this was dated from last year. And based on their analysis, we expect that the total tokenized market capitalization could reach around $2 trillion by 2030. In the bullish case, this value could double to around $4 trillion, but keep in mind, this is excluding cryptocurrencies entirely, Bitcoin and stablecoins. This report's discussing the tokenization of mutual funds, bonds, ETNs, loans and securitization, and alternative funds. And we know the BCG estimates for the tokenization of global illiquid assets by 2030. This is on page 8 if you want to just Google this report, so right here. A $16 trillion business opportunity by 2030, and we can see in the best case $68 trillion. But as we scroll down, like in most reports, we can see this analysis does not include crypto assets. We can ask ourselves, seeing these tokenization reports by huge names, BCG, McKinsey & Company, why do they always exclude crypto assets? Let me know what you guys think down below, but usually these reports are for institutional audiences, so asset managers, custodians, regulators, so they're really focused on tokenizing treasuries, bonds, private credit. And they look at tokenization like representing real-world financial assets right on chain, so not necessarily issuing or investing in native crypto assets. And I also believe these big firms, they don't want to take a position on whether crypto is going to be adopted or not. I think they're trying to avoid controversy and really maintain some type of regulatory neutrality and just stay neutral. And keep in mind, even on page 10, right in this BCG report, they list side by side a variety of public crypto networks. So we have Ethereum, Tezos, Algorand, Ripple, aka the XRP ledger, Stellar. So right in their reports, they're emphasizing the role of blockchain rails and they're acknowledging public chains as potential infrastructure. What's an even bigger deal is the DTCC, the Fed before the Fed existed, we can see published this patent back in March of this year, so just a couple months back. And this was originally shared by Genfinity. You can learn more right at their blog, genfinity.io. And yes, the DTCC, or the Depository Trust and Clearing Corporation, sends a lot of value each year. We can see $3.7 quadrillion worth of securities. Each day, processing more than 100 million transactions amounting to approximately $1.2 trillion daily, maintaining custody of around $87 trillion in securities across more than 130 global jurisdictions. And if you go right to the patents link, it's linked right in this article, by the way, if you guys check out Generation Infinity, and I'll just kind of scroll through here. It's in the description on the left-hand side. I'll just do a control find and I'll type in Ripple because they don't say XRP Ledger. And you can read those right here at 0232 in the description. We can see a variety of different networks that are already compatible with the present invention. And then we scroll down a little bit lower at 0234. So we have another list right there. So what's the big deal about this? The DTCC is massive. They're not being vague. They are explicitly naming a variety of crypto networks. So these networks aren't theoretical. They're actually being considered compatible with financial market infrastructure that's being built right now. And this info proves that the DTCC is designing for interoperability, not isolation, supporting public and private chains, hybrid models, side chains, and DAGs. So once again, remember this information. This is acknowledging a multi-chain future, not just a closed permission system with a bunch of walled gardens. And this is a big deal because tokenized assets from TradFi, traditional finance, could actually flow through to public crypto rails. So pick a network, any network, and this opens the door to real-world assets on Ethereum, Hedera, Solana, SUI, etc. We could think about stablecoin settlements or foreign exchange settlements with the XRP ledger. We could think about XTC with trade finance, or treasury-backed tokens on Cosmos chains. And it's important to remember that public blockchains offer something that traditional finance needs: global accessibility, inclusion, open programmability, 24/7 interoperability, and transparency. You have an audit trail. And nothing's perfect. Private chains are great for privacy, compliance, even higher speed, but public chains unlock liquidity. If you enjoyed this video, be sure to smash the like button and let me know your thoughts down below. You can find all links to my crypto resources, including tools for charting, trading bots, wallets, portfolio trackers, and exclusive discounts right in my link tree in the video description. Thanks for watching, and I'll catch you in the next one.